Ladies and gentlemen, good day and welcome to the Kolte-Patil Developers Limited Q4 and FY'25 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Smith Shah from Adfactors PR. Thank you, and over to you, Mr. Shah.
Thank you, Manav. Good afternoon, everyone, and thank you for joining us on the Q4 and FY'25 results conference call of Kolte-Patil Developers Limited. We have with us Mr. Atul Bora, Group CEO, and Ms. Deepti Rajput, Vice President, Investor Relations. Before we begin, I would like to remind you that certain statements made in today's discussion may be forward-looking in nature and may involve certain risks and uncertainties. A detailed statement in this regard is available in the Q4 and FY'25 results presentation that has been shared with you earlier. I now hand over the call to Mr. Atul Bora, Group CEO, to begin the proceedings of this call. Thank you, and over to you, sir.
Thank you very much. Good afternoon and a warm welcome to everyone present on this call. Thank you for joining us today to discuss operating and financial performance of the company for the fourth quarter and full year ended 31st March 2025. I would like to share my view on real estate environment, followed by overview of the key development during the period under the review, and thereafter Deepti will take you through the key financial highlights. Following this, we will open the session for the question and answer. India continues to stand out as one of the fastest growing economy globally, with FY'25 GDP estimated at about 6.5%. Despite the global trade and policy scenario remains uncertain, India's growth is expected to remain strong, supported by firm domestic demand, accommodative monetary policy and progressive regulatory environment. Also, the Union Budget FY'26 focused on inclusive growth, macroeconomic stability and consumption boost. Realize the tax rates will be benefited middle income individuals, and coupled with lower interest rate could support the demand in housing segment as well. We expect the residential demand to sustain across mid-income and the premium houses. Coming to the performance for the period under the review, I am happy to share that FY'25 has been a strong year for the company, with milestones achieved on various operational and financial metrics, including the collection, realization and the total income. In FY'25, we have achieved highest ever collection of rupees 2,432 crore, making a growth of 18% YOY. This was achieved on account of improved efficiency in construction milestones and steady sales. As a result, operating cash flow stood at 880 crore for FY'25. Sales remained at around 2,800 crore, impacted due to deferment in the planned projects launches owing to the regulatory and procedural delays. In FY'25, we launched projects with a total GDV of approximately 4,000 crore. New launches contributed 42% of the overall sales, reaffirming the optimistic demand scenario and acceptance of our brand. We reported highest ever annualized realization of 7,758 per square feet, making growth of 8% year on year. This was achieved on the back of disciplined pricing strategy and successful implementation of rational price hikes across all the projects. Our flagship projects, Life Republic Township, continued to perform well and contributed 1.9 million square feet to the volume. This reflects sustained home buyer confidence in our offerings and execution. In quarter 4 FY'25, we recorded sales value of 631 crore, supported mainly by sustenance inventory across our portfolio. Collection during the quarter reached to a new high of rupees 704 crore. Reflecting 19% year-on-year growth, Realization for the quarter rose 9% YOY to 7,904 per square feet, led by firm momentum in the Life Republic and our 24K projects. On the business development front, enhancing our future growth pipeline in FY'25, we added a project in Vadgaon, Pune, with a GDV potential of 4,000 crore and potential sellable area of 5 million square feet. Overall, ongoing infrastructure development, evolving customer preferences, expanding economic opportunities, and improved affordability are creating new demand corridors and strengthening the residential demand base. We are consciously working toward strengthening our presence in existing markets and evaluating new locations to widen our footprint within the 3 geographies we operate in. Moving on the financial performance, we reported highest ever annual total income of rupees 1,764 crore, making a growth of 27% year-on-year. This was driven by disciplined execution and timely project completion. Profitability has also been improved. In FY'25, EBITDA at 227 crore, which is grown by 252% YOY, and a PAT number at 107 crore, improved from negative 69 crore. Higher revenue base, improved realization, and cost efficiency have contributed to improved margins. As we move forward, our focus continue to remain on growing sustainably and consistently, delivering high quality outcomes across all the key performing indicators. In our pursuit of redefining living, we are committed to customer satisfaction across segments and geographies. As one of the leading real estate developer with strong presence in Pune and growing footprint in MMR and having created solid foundation for multi-year growth, Kolte-Patil is well positioned to capitalize on opportunities and deliver long-term value. With this, I now hand over the call to Dipti to share financial highlights.
Thank you, Atul. Good afternoon, everybody. I would now like to take you through our financial performance for the quarter and full year ended 31st March 2025. Under CCM-based accounting, our Q4'25 total income grew 37% YOY to rupees 723 crore from rupees 528 crore in Q4 FY'24. For the full year ended March 25, we recorded milestone total income of rupees 1764 crore compared to rupees 1395 crore in FY'24, marking a growth of 27% YOY. Reported profits have also been improving. Q4 FY'25 EBITDA of rupees 112 crore improved significantly as compared to EBITDA loss of rupees 8.7 crore in Q4 FY'24. For the full year FY'25, EBITDA at rupees 227 crore increased by 252% YOY from rupees 65 crore in FY'24. Q4 FY'25 net profit after tax post minority interest stood at rupees 65 crore as compared to a loss of rupees 27 crore in Q4 FY'24. For the full year, net profit after tax post minority interest stood at rupees 107 crore as compared to a loss of rupees 69 crore in FY'24. As you are aware, revenue and profit recognition are closely linked to the progress of project completion in line with statutory accounting norms. With steady construction momentum, we have continued to witness strong collections, underscoring both execution efficiency and sustained demand for our offerings. A key indicator of real estate business health is operating cash flow, which stood at about rupees 239 crore for the quarter and rupees 880 crore for the full year ended March 2025. As on year end, our net debt stood at negative rupees 5 crore. These figures reflect our ongoing commitment to financial discipline, ensuring robust liquidity and operational resilience while pursuing growth. Thank you, and I now request the moderator to open the line for Q&A.
Thank you very much, ma'am. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touch tone telephone. If you wish to withdraw yourself from your question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, please restrict yourself to only 2 questions per participant. If you have a follow-up question, we request you to rejoin the queue. We'll take our first question from the line of Gautam Rajesh from Everflow Partners. Please go ahead. Gautam, are you there? Hello, Gautam, are you there?
Am I audible?
Yeah, now you're audible. Please go ahead with the two questions.
Yes. My question was, can you give the guidance for pre-sales and launches for the next year and how it's going to pan out throughout the year?
Thank you, Gautam. We are very much on track of our long-term guidance. However, given the situation, we will revisit going forward the strategy, and it may take a quarter or 2 quarters to provide you the guidance for the year. However, on the long-term trajectory, we are still remain on very much on track.
Anything regarding the projects, any updates on that over the next year and the new launches that we have?
Yeah. So during the financial year, we have launched the project to the tune of almost GDV potential of 4,000 crore. Given the situations that couple of projects are deferred on account of few of the delays in the approvals cycle, this also will provide you once we take a close look on the upcoming status on those projects.
Okay, so regarding the new launches and pre-sales, you can only give us any update in maybe a quarter or 2. You can't give any other light at present. Yeah, okay. Thank you.
Thank you. A reminder to all participants, please stick to 2 questions per participant. Should you have a follow-up question, we request you rejoin the queue. We have our next question from the line of Dhananjay Mishra from Sunidhi Securities. Please go ahead.
Yeah, thanks for the opportunity and many congratulations for giving very strong operating performance. My question is that at the beginning of the year, we had guided for 3,500 crore, and as you said that a couple of projects were delayed because of approval. So, can you quantify, can you know those projects which can be launched in the H1 after getting the approval?
Yeah, so given the fact that there are general election and state election during the time, and couple of projects, more specifically which we have observed few deferment in the launches. And as I already mentioned that we will keep a close eye on those, and we will update once we see some progress on those.
Okay. Good. And what is the status of this open offer as of now?
So this transaction is very much under regulatory approval process as of now. So all the details are already shared through stock exchanges filing. And once, as and when it is progressing, from time to time we are updating through exchange filings.
Okay. Thank you.
Thank you, sir. We have our next question from the line of Shreyansh Mehta from Equirus Securities. Please go ahead.
Medium to long-term goal, but if you could highlight...
Shreyansh, we weren't able to hear you. Can you please restart?
Now?
Yes, we can hear you now. Shreyansh, are you there? Shreyansh, are you there? We'll move on to the next question. From the line of Himanshu Upadhyay from Burjal Rock PMS. Please go ahead.
Yeah, hi. Good afternoon. Am I audible?
Yeah.
Yeah. So, see, this is a question more on the history of the company, okay, and how, if we look at last 4 years, the realization of Life Republic has gone up from 8,000 to 6,800 rupees per square feet. And it has been consistently around 40% of sales in a year. but still our operating margins are way below 20% for fifth year in a row, whereas when the cycle was bad from FY13 to 20, the margins used to be near 25%. First question is, why is it so? And second question is, what are you doing to improve the margins in the business? Means, is there at our end something what we need to do on the cost side to improve our margins? And where are we lacking? Means, because it's very difficult to understand when realizations keep on going up quarter after quarter. And what we are recognizing today in FY25 is what we sold in FY22 or 23, you think. So where at that point of time also the realizations were continuously increasing. And Life Republic should have been a much higher margin product, means because of the raw land cost which are much lower. Can you give your thoughts and what are you doing to get the margins back?
Yeah, thank you, Himanshu. As you have seen that as compared to FY24, where the EBITDA margin of almost 65 crore, this year we have seen almost 227 crore with YOY increase of EBITDA of 252%, as well as the PAT margin from negative 69 to 107 crore. So there is already a lot of improvement, and as you rightly mentioned that since the APR trajectory, also in last 4-5 years, we have seen a good amount of traction in rise of APR, specifically with the last year as well, the highest ever realization, APR realization for this financial year with 7,758 rupees per square feet, which has increased 8%. We see with all these things is really supporting well to the margin side. And going forward, there will be, margin improvement on the positive side. At the same time, the overall volume, as you see this year as well, the total income, which is one of the highest ever income, 1,764 crore as compared to last year's 1,395 crore. So we see that this momentum is already built, and we will see something better in coming financial year as well.
But is there scope to reduce cost further?
So Himanshu, as and when rationalized, we are doing that exercise as an internal exercise as well. However, it's really not that there to comment as of now.
Okay, one small question.
Sorry,
we did this
Mr. Himanshu, we will request you to rejoin the queue as your 2 questions are up. Thank you so much. We have our next question from the line of Pritesh Seth from Axis Capital. Please go ahead.
So 2 questions from my side. First is on how would you read the market right now, considering last year we had almost 3,800 crore worth of launches as in FY24, and from those launches we had a contribution of roughly 1,800 crores. This time also we had like almost launches of 4,000 crore, but contribution is roughly 1,100 crore. So is it just because of the timing of these launches, hence we are seeing this lower contribution, or in general you see some weakness in your home market? That's my first question. And second question is on the timelines part of the approvals. Where do you think is the industry still lagging in terms of getting the approvals? And any progress or anything you are seeing that can fasten up this approvals in coming quarters, or this will continue to remain at this steady pace? So those are my 2 questions. Thank you.
Thank you. So, coming to your first questions on more specifically on the demand scenario, we have seen in last couple of months most of the walk-ins and the conversion numbers seems as in a very positive mode, specifically in Pune and Mumbai region, where we have seen uplift demand in the premium houses. At the same time, MIGs keep continuing sustained story. At the same time, there are quite a good initiatives of interest rate reductions and few of the recent budget announcement. We see the demand will sustain. Coming to the second question, where under approval challenges and this scenarios, we have seen obviously last year there are few of the national and the state level elections, and might be those are the couple of reasons. But however, we see that this scenario is improving and improved a lot. So going forward, I don't see, but obviously approvals are always a dependent factor. So it always have certain quarter to quarter slippages.
Thank you. A reminder to all participants, please restrict yourself to only 2 questions per participant. We have our next question from the line of Shreyansh Mehta from Equirus Securities. Please go ahead.
Yeah, thanks for the opportunity. So 2 questions from my side. So while, we do understand that the deal is on, at the same time, there's no clarity on approvals. But if you could, some broad understanding or broad thoughts on the launches of Mumbai and at the same time launches of, Pune XLR, some broad numbers, A. And secondly, on the P&L, just wanted to understand, this quarter has been very robust. So how should one look at FY'26 and FY'27 from that perspective?
Yeah. Thank you, Shreyansh. So in terms of Pune launches, if I give you a broader perspective, last year as well, we have launched Life Republic itself. We have launched project to the tune of 2,000 crore. And in the rest of the Pune market, we have launched more than 1,700 crore worth of inventory. At the same time, in Mumbai, we have launched our first project in Navi Mumbai. And given the fact there are a couple of upcoming launches in Mumbai as well as in Pune. However, as I have already mentioned that we are keeping a close eye on the approval procedures, and as and when we see progressive development, we will keep updating you.
Sure. So second on the P&L.
Yeah.
Margin.
So on the margin front, I already explained you. I guess if you want, I can repeat it. On the EBITDA front, we have
Sure.
At 13%, that's 227 crore, which is improved by 252%, and we see this momentum will continue. As you have seen that there is a quite improvement in APR, and going forward, all those projects will get recognized. The margin will gradually increase.
Got it. Sure, sir. That's it from my side. Thank you and all the best.
Thank you. We have our next question from the line of Biplav Devavarma from Antique Stock Broking. Please go ahead.
Sir, just one first question is on the long-term guidance. So can you just, I know things are a little bit hazy right now for 26, but long-term, where do you want capital to be? If you have some clarity on that, you can give some clarity on that.
Thank you, Biplav. As far as I have already said that on the long-term guidance, we are very much on track. We are closely working on those guidance. However, given the fact we are still revisiting the strategy, and maybe it will take certain time to guide you further.
Okay, so my question was, what was the long-term strategy that you mentioned?
So long term, we have already guided on 30,500, and that is very much on track.
Okay. Okay. My second question is on the, now Blackstone and there is a promoter, and there is a Blackstone who would be jointly controlling the company. So, how do you envision promoters and Blackstone's role involvement in company's strategic direction and day-to-day operation? If you could give some insight on that, that would be really helpful.
Okay. So this transaction is very much under approval and regulatory procedure. I think it is, for me, it's very early to comment. Even though we have shared all the details through regulatory filings, however, once strategically it moves and come to some conclusion, I think that is the right time where we can give you more comment on those.
Okay, sir. Thank you, sir.
Thank you. We have our next question from the line of Prolin Nandu from Edelweiss Public Alternatives. Please go ahead.
Yeah. Hi, sir. Two questions from my side. While these are repetitive, some want some clarity. First on launches, right? So, one of the reasons why we probably were not able to meet our guidance, right, of FY'25 was delays in the Mumbai launches. Now, I wanted to understand whether that was the only reason, and was this something to do with the macro and general election, or was it something very specific to our project? And going by your previous answers, is it fair to understand that these problems should no longer be there in FY'26? That's my first question on launches, sir. I'll ask the next question once you answer this.
Yeah. So we are, as I said, that we are keeping a close eye on most of our sanctions and approval procedures. Even though today we still have a strong pipeline for the launches, which will be in line with our long-term guidance to meet those long-term guidance. However, I really want to not comment much unless and until those approval get progresses at an advanced stage. That time we will keep guiding you on specific timelines.
Okay, understood, sir. The second question is on margins, right? Now, in the previous call, what you have mentioned is that, the reason why our reported margins were lower in, let's say, FY'24 and 25 was some of the projects were taken during the post-COVID era and there was cost inflation. And one should see the recent projects being reflected in numbers because the way accounting is done sometime in FY'26. Right. So that guidance still holds true of, let's say, mid to high teens margins in first 2 quarters and then, nearing the 20% by the end of FY'26. That's what you had guided for in the previous call. Does that still hold true?
I have already stated that we have seen a good amount of improvement in EBITDA and PAT number. And we foresee that in coming time, this number will definitely be better.
Thank you so much for your time.
Thank you. We have our next question from the line of Siddharth Agarwal from Prudent Partners. Please go ahead.
Hi, good afternoon, sir. My first question is, could you please give us some estimate of our fixed corporate annual expenses for the year, which has nothing to do with project operational cost?
Thank you, Siddharth. I think it remains more or less steady as compared to even FY'24 versus 25. The other expenses, which goes roughly around in the trajectory of 150 crore.
Okay, thank you. And so the second question is, so could you give us some estimate of our delivery or value or area-wise, which is scheduled for possession in FY'26 or 27, as per our commitments to our clients?
So, Siddharth, as I already mentioned, that for the next year guidance and is it in terms of pre-sales or maybe delivery, it's too early to comment. We will be going
Sorry,
through.
but sir, this is delivery will be as per projects which were launched, and we already know what is deliverable for the company this year, right?
Yeah.
It's not a guidance.
Correct.
What is scheduled? There could be slippages, but what is as per the project's timeline scheduled for delivery this particular year?
So is it this year we have delivered and handed over almost 2,700 of units. This next year, we estimate those to go around 3,500 units plus.
Okay. Thank you, sir. Thank you very much.
Thank you. We have our next question from the line of Bharat Seth from Quest Investment Advisors. Please go ahead.
Hi. Thanks, Atul and Dipti, for the opportunity.
Sorry to interrupt, Mr. Bharat. Can you please be a little louder?
Hello, am I audible now?
We can hear you now. Please go ahead with the two questions.
See, Atul, my first question is related that in initial or opening remark, there is a delay in the approval due to regulatory changes, and some of other Bombay-based builder also as developer commented on. So if you can share some what change has happened on regulatory guideline and which has caused the whole delay, and what stage we are, in this regulatory compliance.
No, I think this is, as you have already mentioned, that this is more of an industry-related issue, not a company-specific.
I understand, but if you can give little more color, what has changed?
Sorry?
I understand, but if you can give some more color, what change in regulatory approval has happened?
No, this is improving.
No. What are the changes that regulator has brought which has delayed the whole approval process?
Yeah. So there are few environmental committee aspects, or maybe there are few notifications or regulatory changes that these are not something as specific as such. There are multiple factors which are in the entire approval chain. So it is hard to comment like any specific reason for that.
But how much,
Sorry to interrupt, Mr. Bharat. Can we please request you to rejoin the queue? Thank you very much. We have our next question from the line of Rohit from iThought PMS. Please go ahead.
Thank you for the chance. Sir, if I remember correctly, I think in the last few con calls we had talked about the finance cost being a certain number close to 1,800 crores. However, it was significantly lower. So can you explain what is the reason for the same, and just for us to understand what happened? Like this year we have recorded around 42 crores, which was this quarter was only 6 crores, and earlier it was around 12-15 crores a quarter. So can you explain this, and also how do you see this number for the next financial year? And then I have another question which I'll ask after this, sir.
Thanks, Rohit. So finance cost, which is for the financial year FY'25, for 42 crore, and your question is, how this as compared to the last year, it's rationalized to be based on how much is directly apportioned to the project. So few of the finance costs which directly charged to the WIP, which is correlating to a particular project, and that's how actually there is a little bit of a lower finance cost in this financial year, because it is largely been capitalized basis on the use of the capital.
So what is the expectation for this financial year, sir? FY'26? On this account?
It should be in the range of around same, or maybe 20-30% on the higher side.
Got it.
However,
sir, Sorry, finish.
Please continue.
No, sir, you were saying something, so
No, that's fine. Let's carry on.
And sir, given, in terms of launches for this financial year, you said that you still don't have clarity because of certain regulatory changes. But wherever we are already launched and wherever there's sustained changes happening, what kind of sales are you seeing, and how do you see the sustained sales for this year in the launches that in the projects that have already launched? So any thoughts on that?
So for this financial year, I don't mention that regulatory delays. I mentioned that we are in a process of revisiting on our strategy, and we will guide the market about what will be the launches in the upcoming year.
And when is that?
Sorry to interrupt, Mr. Rohit. May we please request you to rejoin the queue?
So I'm just asking this final follow-up there.
So it is given the situation as of now, we expect that quarter to quarter, where we are going through a few changes, and might strategically we have to go through on most of these issues, and we will keep guiding the matter once we are ready with this information.
All right.
Thank you. We'll move to our next question from the line of Vikas Sharda from Anti-Asset Management. Please go ahead.
Yes, hi, good afternoon. I have one question on business development side. So in the previous call, you were quite confident to touch the guidance of 8,000 crore of business development, and you mentioned that some of the deals were quite close to completion. Could you update on the status of those? And just a follow-up question to that are these business development deals put on hold?
Yeah, thanks, Vikas. So business development is one of our very important initiatives, and last year we have concluded a transaction with a GDV potential of 4,000 crore and a total potential of a project of 5 million square feet in Pune. At the same time, there are few deals, it's very early to comment, but yes, which are moving in a quite positive direction, and we will keep updating once we conclude on those transactions.
Thank you, sir. The participant is disconnected. We'll move on to the next question from the line of Piyush Kumar from Magnus Hathaway Investments. Please go ahead.
Yeah, am I audible?
Piyush, you need to be a little louder.
Yeah, am I audible now?
Yeah, perfect. Please go ahead.
Yeah. So, thank you so much for taking my question. So, sir, my question is regarding the growth in realization for the Life Republic Township project.
Yeah.
The growth in realization for Life Republic Township project.
So for the financial year, we have the average price realization has grown almost 7% at Life Republic project, and the volume is 1.9 million square feet at Life Republic project, which is very much in line with the last financial year.
Okay. So thank you so much, sir. And sir, my second question is, sir, we gave a pre-sales guidance of 13,500 crore for 3 years. So are we moving in the line from the same direction, sir?
Yeah, I've already mentioned that is very much on track. Even though we will keep updating you once we go through a few of revisiting on our strategy. So that may take some time, and we will guide you further in case if there will be any change.
Okay, sir. Thank you so much, sir. All the best.
Thank you. We have our next question from the line of Rahil Shah from Crown Capital. Please go ahead.
Hello. Good evening, sir. Can you hear me?
Yes, Rahil, we can hear you.
Yes, hi. So 2 questions. I'm sorry, I was dropped in between, and I'm not sure if this was answered. But firstly, for FY'26, have you given any pre-sales guidance along with collections? And this 30,500 crores number which you mentioned, what is this with regards to the long-term guidance? If you can clarify that again. Thank you.
Yeah. So 30,500 crore is a long-term guidance of FY'25 to FY'27. Specifically for FY'26 guidance, I have already mentioned that we may take a quarter to revert on the specific guidance for the financial year. However, the long-term guidance is still very much on track.
No, what is it about, the guidance? The figure is for which, like, particular...
Pre-sale guidance.
Pre-sales. Okay, got it. Okay, sir. Thank you and all the best.
Thank you. We have our next question from the line of Mehul Panjwani from 40 Cents Capital. Please go ahead.
Thank you so much for the opportunity. Sir, I have two questions. First question is about what is the percentage of GDV value for the entire company which we can attribute to Life Republic? And if you can answer that, and then I'll ask my second question.
For the financial year FY'25, out of the total GDV pre-sale number, it contributed 45%.
45%. And what was that number for FY'24, sir?
I think it is very much in line with that only. 45, if I'm not wrong, to be precise. Last year it was also 45%.
Okay. And sir, my second question is, sir, the real estate environment was quite robust last year in FY'24. In fact, I mean, to the best of my knowledge, there is a bit slowdown from FY'24 to FY'25. So I would like to know what was the reason that we went into red last year and now we have jumped back to a certain positive. Can you elaborate a little bit on this? Thank you.
There are multiple factors, the project which get realized during the last financial year and the price APR of those projects versus the cost. And at the same time, the quantum of realization for the last financial year as compared to this financial year was also less. So there is a natural impact of certain fixed overhead cost which goes through P&L, charged through P&L. At the same time, during the financial year, it is supported with a better APR and controlled cost and improved on the efficiency in terms of getting the project completions on time.
Okay. Okay, sir. Thank you.
Thank you. We have our next question from the line of Himanshu Upadhyay from Bajal Rock PMS. Please go ahead.
Yeah, hi. So I have two questions. First is, we had hired a lot of new employees at management and mid-level for BD and the quality side of the execution. Are you seeing any improvement on customer satisfaction?
Sorry to interrupt, Mr. Himanshu. Your voice is quite muffled. Can you go again and try using your handset?
Yeah, I am on handset.
Yeah, now we can hear you.
What I was asking was, we had hired a lot of people at the management or mid-level for business development and the quality side of the execution. Are we seeing any improvement on customer satisfaction at handover stage, or still it will take some more quarters before any improvement? And what progress have we made on standardization of operating parameters for construction, quality check, etc.? And also at the handover stage, so some thoughts on what were the priorities for last year? Where are we on that journey?
Thanks, Himanshu. This is the foremost priority for the company, customer centricity, and this is an ongoing process. We are rebuilding, it for improvising in the upcoming year as well. At the same time, constantly from last couple of years and going forward as well, almost around 2,500 to 4,000 units handover happened, and we are getting quite experienced people. The team is implementing tech-enabled solutions to handle all this scale going forward. But yes, to nutshell, we are started this journey and improvement is quite visible. At the same time, there will be much more improvement in coming days as well.
Secondly, we did this Vadgaon deal. What approvals have we got, and any payment is remaining for that land deal? And project approvals, what I'm asking.
We cannot hear you properly. Can you please repeat your question?
No, I was asking about this Vadgaon deal. Have we any payment is pending, and is there any approval also pending to complete the transaction? And have we applied for building approvals for environmental or whatever approvals we need to do on that project?
So Himanshu, Vadgaon deal is a joint venture, joint development deal, wherein the deal is at a land stage, and we have started the process of approval. Even though some primary approvals we have got, few NOCs we have received, but still there are multiple approvals and multiple agencies are involved into it. But to tell you or comment you on the Vadgaon approval procedure is already started, and it is progressing well as per the plan activities.
Okay, thank you.
Thank you. Ladies and gentlemen, that would be the last question for today, and I now hand the conference over to the management for closing comments.
Thank you once again for your interest and support. We will continue to stay engaged, and if you have any further questions, please feel free to reach Dipti Rajput at KPDL. Look forward to interacting with you for the next quarter.
Thank you. On behalf of Kolte-Patil Developers Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.